Hey there, fellow investors. Welcome back to the Investing Iguana, where we bring you the latest and greatest in the world of finance. Today, we're focusing on the Singaporean stock market and bringing you our top picks for steady income in 2023. If you're looking for reliable blue-chip stocks that are paying out some serious dividends, then you're in the right place. So sit back, relax, and get ready to make some smart investment decisions with the Investing Iguana. I'm glad you are interested in investing in blue-chip stocks in Singapore that pay good dividends. Blue-chip stocks are well-established companies that have a strong track record of profitability and stability. They usually pay out regular dividends to reward their shareholders. However, not all blue-chip stocks are equal. Some may offer higher dividend yields than others, depending on their earnings growth, payout ratio, and future prospects. DBS Group, SGX, D05 DBS is Singapore's largest bank by market capitalization and one of the leading financial institutions in Asia. The bank is benefiting from the rising interest rates environment, which boosts its net interest income and margin. DBS reported its highest ever net profit of 2.2 billion Singapore dollars for the third quarter of 2022 and paid out a quarterly dividend of 36 cents per share. DBS Group achieved a record performance in 2022 as net profit grew 20% to SGD 8.19 billion. Total income rose 16% to SGD 16.5 billion, crossing SGD 16 billion for the first time. In addition to its strong financial performance, DBS Group has been actively expanding its digital capabilities in recent years. The bank has made significant investments in technology, including the launch of its digital banking platform, DBS Digibank, and the acquisition of a majority stake in a local fintech firm. These efforts have paid off, as DBS has been recognized for its digital innovations with numerous industry awards. Looking ahead, DBS Group is well positioned to continue growing and delivering value to its shareholders, making it a solid choice for investors seeking steady income and long-term growth. Singapore Technologies Engineering, SGX, S63STE is a global technology and engineering conglomerate that serves the aerospace, smart city, and public security sectors. The group has seen strong revenue growth across all its business segments, driven by organic growth and acquisitions. STE also secured 4.8 billion Singapore dollar worth of new contracts in the third quarter of 2022, bringing its order book to a 3-year high of 25 billion Singapore dollars. The group declared an interim dividend of 5 cents per share for the first half of 2022 and has a history of paying a final dividend of 10 cents per share for the second half. Revenue for full year 2022 is 9.04 billion Singapore dollars, up 17% from FY 2021. Why STE is a good dividend stock? STE is a good dividend stock for several reasons. First, the group has a diversified and resilient business model that can withstand economic cycles and technological disruptions. Second, the group has a strong track record of earnings growth and cash flow generation, which enables it to pay consistent and growing dividends. Third, the group has a robust order book that provides revenue visibility and stability for the future. Based on its interim dividend of 5 cents per share and its historical final dividend of 10 cents per share, STE has an annualized dividend yield of about 5% at its current share price of 3 Singapore dollars. This is higher than the average dividend yield of the Straits Times Index, STI, which is around 3%. Singapore Exchange, SGX, S68 SGX is the sole securities and derivatives exchange operator in Singapore and also offers clearing, settlement, data, and regulatory services. The exchange has been diversifying its revenue streams by expanding into new asset classes, such as foreign exchange, commodities, fixed income, and sustainability. SGX reported a 9% year-on-year increase in revenue and a 12% year-on-year increase in net profit for the first quarter of 2023. The exchange maintained its quarterly dividend of 8 cents per share and has a policy of paying out at least 80% of its net profit as dividends. Why SGX is a good dividend stock? SGX is a good dividend stock for several reasons. First, the exchange has a monopoly position in Singapore and a strong reputation in the region and globally. This gives it a competitive edge and a loyal customer base. Second, the exchange has a diversified and scalable business model that can capture growth opportunities in different markets and segments. The exchange has been investing in new products and platforms to cater to the evolving needs and preferences of its clients. Third, the exchange has a high and stable profitability and cash flow, which allows it to pay generous and consistent dividends. Based on its quarterly dividend of 8 cents per share, SGX has an annualized dividend yield of about 3.5% at its current share price of 9 Singapore dollars and 20 cents. This is in line with the average dividend yield of the STI. Singapore Telecommunications, SGX, Z74 Singtel is one of the largest telecommunications companies in Asia, with operations in Singapore, Australia, India, Indonesia, Thailand, and the Philippines. The group has been undergoing a strategic review to unlock value from its assets and streamline its operations. Singtel reported a 7% year-on-year increase in revenue and a 10% year-on-year increase in net profit for the second quarter of 2023. The group declared an interim dividend of 0.0525 Singapore dollars per share and has a guidance of paying out between 60% to 75% of its underlying net profit as dividends. Why Singtel is a good dividend stock? Singtel is a good dividend stock for several reasons. First, the group has a dominant position in Singapore and a strong presence in other emerging markets. This gives it a large and diversified customer base and a steady stream of recurring revenue. Second, the group has been adapting to the changing landscape of the telecommunications industry by investing in new technologies and services, such as 5G, digital transformation, and cybersecurity. These initiatives can enhance its competitiveness and growth potential. Third, the group has a prudent and flexible dividend policy that reflects its financial performance and outlook. The group has a guidance of paying out between 60% to 75% of its underlying net profit as dividends, which implies a dividend yield of about 4% to 5% at its current share price of 2 Singapore dollars and 60 cents. This is higher than the average dividend yield of the STI. CapitaLand Integrated Commercial Trust, SGX, C38 UCICT is the largest real estate investment trust, REIT, in Singapore by market capitalization and owns a portfolio of office, retail, business park, and integrated developments. The REIT has been resilient amid the pandemic, with occupancy rates remaining high and rental reversions turning positive. CICT reported a 16% year-on-year increase in gross revenue and a 19% year-on-year increase in distribution per unit, DPU, for the third quarter of 2022. The REIT has a target payout ratio of at least 90% of its distributable income. Why CICT is a good dividend stock? CICT is a good dividend stock for several reasons. First, the REIT has a diversified and high-quality portfolio of properties that cater to different segments and needs. The REIT's properties are located in prime locations and have strong tenant profiles and long lease terms. Second, the REIT has demonstrated its ability to weather the pandemic and maintain its operational performance. The REIT has achieved high occupancy rates and positive rental reversions despite the challenging market conditions. The REIT has also implemented various initiatives to support its tenants and enhance its customer experience. Third, the REIT has a generous and consistent dividend policy that reflects its distributable income. The REIT has a target payout ratio of at least 90% of its distributable income, which implies a dividend yield of about 4% at its current share price of 2 Singapore dollars and 50 cents. This is higher than the average dividend yield of the STI. Ascendas Real Estate Investment Trust, SGX, a 17U REIT is one of the largest industrial REITs in Asia by market capitalization and owns a portfolio of logistics, data center, business park, light industrial, and suburban office properties across Singapore, Australia, Europe, and the US. The REIT has been growing its portfolio through acquisitions and developments while maintaining high occupancy rates and positive rental reversions. REIT reported a 9% year-on-year increase in gross revenue and a 7% year-on-year increase in DPU for the second quarter of 2023. The REIT has a target payout ratio. Why REIT is a good dividend stock? REIT is a good dividend stock for several reasons. First, the REIT has a diversified and resilient portfolio of properties that serve different sectors and markets. The REIT's properties are well located and have strong demand and growth potential. Second, the REIT has been expanding its portfolio through strategic acquisitions and developments while enhancing its existing properties through asset enhancement initiatives. The REIT has increased its exposure to high-growth segments such as logistics and data centers, while reducing its exposure to lower-growth segments such as light industrial and suburban office. Third, the REIT has a stable and sustainable dividend policy that reflects its distributable income. The REIT has a target payout ratio of at least 90% of its distributable income, which implies a dividend yield of about 3% at its current share price of $3.40. This is in line with the average dividend yield of the STI. Mapletree Logistics Trust, SGX, M44U MLT is a REIT that owns a portfolio of logistics properties across Singapore, Hong Kong, Japan, China, Australia, South Korea, Malaysia, and Vietnam. The REIT has been enhancing its portfolio quality and diversification through acquisitions and asset enhancement initiatives. MLT reported a 13% year-on-year increase in gross revenue and a 9% year-on-year increase in DPU for the second quarter of 2023. The REIT has a target payout ratio of at least 90% of its distributable income. One reason why MLT is a good dividend stock is that it has a high and stable dividend yield that is well covered by its earnings. According to Simply Wall ST1, MLT has a current dividend yield of 5.4%, which is higher than the industry average of 0% for industrial REITs. The dividend yield has been consistent over the past 10 years, ranging from 3.8% to 7.4% too. MLT also has a payout ratio of 57%, which means it retains enough earnings to reinvest in its growth and maintain its dividends. MLT has a target payout ratio of at least 90% of its distributable income, which shows its commitment to rewarding its shareholders. Venture Corporation, SGX, V03 Venture is a global provider of technology solutions, products, and services for various industries, such as life sciences, advanced manufacturing, networking and communications, and consumer products. The group has been delivering strong earnings growth and cash flow generation while investing in research and development and innovation capabilities. Venture reported a 16% year-on-year increase in revenue and a 20% year-on-year increase in net profit for the third quarter of 2022. The group declared an interim dividend of 25 cents per share and has a policy of paying out at least 50% of its net profit as dividends. Another reason why Venture is a good dividend stock is that it has a track record of paying dividends consistently and increasing them over time. According to Dividends.sg, Venture has paid dividends every year since 1999 and has increased its dividend per share from 8 cents in 1999 to 75 cents in 2022. Venture has a current dividend yield of 4.5% according to Simply Wall ST, which is higher than the market average of 0% for Singapore stocks. Venture also has a policy of paying out at least 50% of its net profit as dividends, which shows its confidence in its earnings sustainability and its willingness to share its profits with its shareholders. ComfortDelGro Corporation, SGX, C52 ComfortDelGro is one of the largest land transport companies in the world, with operations in Singapore, Australia, China, the UK, Ireland, Vietnam, and Malaysia. The group has been recovering from the impact of the pandemic, with revenue and net profit improving sequentially for the third quarter of 2022. The group also announced several new initiatives and partnerships to expand its business and enhance its competitiveness. ComfortDelGro declared an interim dividend of 0.043 Singapore dollars per share and has a policy of paying out at least 50% of its net profit as dividends. ComfortDelGro has a long history of paying dividends to its shareholders, dating back to 2003. ComfortDelGro has a long history of paying dividends to its shareholders, dating back to 2003. The group has maintained a dividend payout ratio of at least 50% since 2015 and has increased its dividends per share from 4 cents in 2015 to 0.085 Singapore dollars in 2022. The group's dividend yield for 2022 was 8.48%, based on its closing share price of 1 Singapore dollar and 17 cents on March 23, 2023. This is higher than the average dividend yield of the STI index, which was 4.32% as of March 22, 2023. ComfortDelGro's dividends are supported by its strong cash flow generation and resilient business model, which have enabled it to weather the challenges posed by the pandemic and emerge stronger. Singapore Airlines, SGX, C6LSIA, is the national flag carrier of Singapore and one of the leading airlines in the world. The group has been navigating through the challenges posed by the pandemic, with passenger traffic gradually recovering and cargo demand remaining strong. SIA reported a 64% year-on-year increase in revenue and a net profit of 71 million Singapore dollars for the second quarter of 2023. The group did not declare any dividend for the period but has resumed its dividend policy of paying out at least 20% of its net profit as dividends. SIA has a track record of rewarding its shareholders with dividends, having paid out dividends every year from 2003 to 2019. The group suspended its dividend payments in 2020 and 2021 due to the severe impact of the pandemic on its business and the need to conserve cash too. However, with the improvement in its financial performance and liquidity position, SIA has resumed its dividend policy of paying out at least 20% of its net profit as dividends too. The group declared an interim dividend of 10 cents per share for the second quarter of 2023, which translates to a dividend yield of 1.76%, based on its closing share price of 5 Singapore dollars and 69 cents on March 23, 2023. SIA's dividends are expected to increase as the global travel demand recovers and the group leverages on its competitive advantages and growth opportunities. And that's it for today's video, folks. We hope you enjoyed our analysis of the Singaporean stock market and our top picks for dividend stocks in 2023. These are some of the best companies to invest in if you're looking for steady income and long-term growth. Of course, you should always do your own research and due diligence before making any investment decisions. If you enjoyed this video and want to stay updated on the latest investing trends, tips, and expert advice, make sure to hit that like button and subscribe to the Investing Iguana. We're constantly working on new content to help you navigate the world of investments with confidence. And don't forget to hit the notification bell so you never miss any of our videos. If you have any questions or suggestions for future topics, feel free to drop a comment below. We love hearing from our audience. Thank you so much for joining us today, and we'll see you in the next episode. Until then, keep investing wisely and growing your wealth. This is the Investing Iguana, signing off.